Hey everyone, Dan here. We are just after market close on Wednesday, May 12th, and today we're going to do a few things. We're going to take a look at QQQ and SPY to get a sense of where we are with the Nasdaq and with the S&P 500, and then we're going to talk about a couple of opportunities that I think might be showing themselves in the form of a dip buy with AMD and then a potential short squeeze with SoFi by way of its SPAC IPOE. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's dive right in. So first we're going to do QQQ and SPY to get just a sense of like when the pain might stop. And if history tells us anything, it tells us that it will. So I'm sort of seeing two main inflection points. One coming up in this supply and demand zone here. That would bring us to about 313 down to 310, call it. And so to me, that may be a decent dip buying opportunity for anyone who's like actually getting into the QQQ ETF, but maybe folks that are looking for some sort of a pick-me-up within the tech sector, which I think is then having an adverse impact on the growth sector as well. If we can't sort of hold price there, I would look at this as the more apparent. This is, I actually charted this box first, and then I thought, well, let's see if there's something that might be a little bit closer to where the price currently is at 316. But this one to me looked very, very obvious with the reaching down support here, previous jumping off point here, and then a bunch of resistance zones, stretching back several months. So to me, this one makes a ton of sense. So I wouldn't be shocked if we came down to test 300 and then maybe came into the low 290s. And I know folks may not want to hear that, but if you have a sense of what might be happening, then you can at least adjust accordingly. And so that's what I'm going to be looking for. This first box here is obviously, like I said, very close to where the current price is. That starts at about high 313, so that would just be another like $3 drop, just about exactly, in order to get a bump up. Like less than 1%. And so, there's the opportunity there. But then, yeah, if it can't hold that, I would look at that lower zone as a potential really good hold zone. And if for some reason it falls through 290, then, we can certainly look again. There's a lot of activity here as well at this like low 270s. But let's hope that we don't have to be taking a look at that in the coming days. On SPY, pretty similar. I think there's a very small tight zone here, which actually represents there's a gap here that is hard to see with the green box that I drew in, but there's actually a gap there that we could say maybe coming down to fill, which would bring it down to about 401. About 401. So that could be in sight really, really soon. And then there's another really good area here, which was the sort of jumping off point for this last push up. And that starts at about 394. That's where that push up to 422 started. So a really good like $28, $29 range that it got off of that jumping off point. Previously a bunch of resistance there, and even resistance underneath that zone that was turned into support. So if like on the QQQ, that first one doesn't hold, meaning if it doesn't just come down to fill this gap and then head itself back up, then I would look for potential dip buys to start here. About 394, stretching down to about 388, we'll call it 388. If for some reason that can't hold, I would suspect that this is a next really good strong zone that it could be coming down to, but that would be quite a drop at this point, 356 down to about 350 if we head down there. So that's what I'm going to be looking out for. I think there was also a gap on the QQQ that I was going to point out. Oh yeah, there was a small gap here, but when we have previously looked at gaps with QQQ, we have noticed that it does often fill them. So it has filled this one now. So then if that was part of the reason for the drop, then it becomes a question of, okay, how much has the momentum shifted that is adversely affecting and impacting, um, it getting drawn down further. If we do want to take a quick look at sort of like the RSI, it's actually mid-range. This is on the weekly chart, so so it still has like potential to sell off more by way of the RSI. It does spend a lot of time in this mid-range, so it wouldn't be surprising if it found a little bit of a floor here, because you don't often see it go all the way through to oversold. And on the MACD, it's actually up really high because, again, we're on the weekly, so there's like this giant push up that is impacting most of this. But there's recent bearish crossover, the MACD crossing below the signal line. Again, I mean, it was barely over the signal line, but sort of like kissed here. And then you can just see there's just like no bullish. There's not really been any strong bullish momentum here since, this shows since like September. But the interesting thing is the bearish pressure that came in was so weak that the MACD was just able to sort of like maintain its height here, very, very high off of the baseline. So it has a lot of room to fall on the MACD, so I would just be cautious with that. On SPY, I wouldn't expect anything tremendously different, but they are different things. So, this is a bit higher on the RSI. And this too spends a lot of time in mid-range. If you look right here, that captures a bunch of touch points for SPY. So, it may come down to that area, which would certainly fill that gap that we talked about and probably stretch it in maybe to that middle price box area. On the MACD, also very, very high. MACD was actually over the signal line, is actually looking like it may cross over, but you see all of this bullish momentum is dying down. It's doing a bit more methodically than we saw on the QQQ. But to that end, the bears haven't been able to, since this like sell-off last year, which I'm sure we all remember well, it hasn't really been able to get any foothold, even with this sort of like these little hiccups, or these little stutter steps, like here and here and here. Like these are generally like pretty brief periods, actually, that probably at the time felt like, oh no, are we going to drop like we did here again? But then it just quickly picked itself back up. So, that being the case, that sort of like stutter step and then pick itself back up is why I wanted to shift into potential dip buying opportunities. This, of course, isn't to say that we can't continue to go down. Of course we can, but if history tells us anything, it is that these recoveries happen pretty often, pretty quickly, and very, very consistently. So that's why I wanted to look at a couple of opportunities, not spend a bunch of time, but I noticed this last night. So AMD has this really, really strong zone that has been supplying its support since like August of last year. That's early August of last year. And every time it's dipped down, it has been able to jump off. The one thing that is a little bit potentially problematic is on the other side, there was sort of like the topping out that was happening after it dipped was primarily happening here, which like this whole area, didn't quite make it up there. This wick stretched up there, but it's hard to know if that really like made any bullish headway or not. As you can see, that happened on obviously a big red volume day, and so it's back in this box now. As you see, the wick stretched down there, and is trying to like hold this box, it looks like. And so I took a dip position in AMD today to sort of see if there is anything to this area that has held up for several months now, or not. But that's what I'm looking at the moment. And there is also this trend line support that has been holding for quite some time, which would give it a long ways to drop still. This would bring it down into like the mid 60s, but I would say that these areas are probably more impactful than that longer term trend line. I mean, that also is stretching back a couple of years. So, grain of salt there. AMD is in a much different place than it was when it was $16 a share. And then, we know that RSI is very, very impactful for AMD. So this was the other thing that I noted, even on the weekly. So even with like all this massive gain, that we've seen here in recent weeks, meaning like over the course of dozens and dozens of weeks, it's still all the way down at 41. And that historically has been a very, very low point. You see it happen back here, but that was before it even like started this big push up. So since it has started its big push up, it often jumps off from around here, like mid 40s to maybe even closer to 50. So the fact that it's in this low 40s zone, to me, sort of screams oversold potential. Not definite, not a guarantee that it'll reverse, but potential. So I'm sort of lining these things up. This oversold territory plus this previous strong support zone. And that's sort of like why I took, the chance on this dip position. Additionally, the MACD has come down a lot, and while the bearish momentum is picking up, it is much better set up for a bullish crossover because it has a lot of room to run. Whereas you saw the MACD on the SPY and the QQQ looked much different for their potential because they're already way up here, and so they just have much more potential to fall. Whereas the MACD for AMD is on the baseline, basically, and so there's a ton of room to run back up, which again historically has been what it has done. Doesn't mean that it'll have to, but it just means if we take into account what has historically been the case, this would be it. All right, so there's my case for AMD. IPOE will do a little bit of a different thing. I want to take a shorter time span here. And let's zoom in. So what I'm basically looking for is like a floor to establish, and then I'll talk about how that sort of like plays into and the evidence for potential short squeeze coming up. So similar-ish to AMD, there is, a pretty decent floor appearing here. That sort of like was the jumping off point for this push up that we saw at the beginning of May. And then when it came down, that's where it caught itself, tried to push up again, came down, and now is catching itself there for the moment. So I don't know if that will sustain or not, but that's the question. So if we look for sort of like a couple of potential like green days coming up, that's what I would be looking for if there's any hope for the short squeeze to occur. And if we just look at sort of like why I think that may be happening, let me actually start here and just show you. Sorry, I know that this is like cut off on the screen that I have, so sorry about that. Let me just zoom out a little bit so you can see it. Okay, so here, this shows the short interest, the most shorted stocks, and the short interest. So you have IPOE here. Almost 32% of the float is shorted. And that is very high. And so like often folks will start to look at short squeeze potential over 10%, definitely over 20%. You definitely saw insane things before with like the GameStop situation and everything, like over 100% and whatnot. But 32% is not over 100%, but it's still very high. And then if we look at the cost to borrow these shares, that's what I'm looking at here. The cost to borrow these shares is a 94% fee. that is remarkably high. As you see, when the availability of shares to borrow too short, is very, very high, the fee is very low here, and that's when a lot of the short volume will rush in. And so this short volume has been increasing, and when that happens, the availability of shares to borrow in order to short sell them can become quite scarce. So right now you see the fee is all the way up at 94% and only 10,000 available. This is just from Eyebrow Desk. This isn't everything under the sun, but that's a very, very high fee to be paying to hold it and not have to close yourself out of your position and buy back those shares if it starts to move against you. So if IPOE can get a few green bars and get some momentum upward, there's a really, really strong potential I see for the fees to be very high, the availability to be very low, and the float to be the percentage of the float that's shorted being very, very high. Those three things, along with a couple of green days, could force a bunch of those short sellers to feel like they have to close their position and give us the start of or an immaculate short squeeze on IPOE. So I would keep eyes peeled for that. But again, in my opinion, the first thing that we're going to want to see is that fee to stay very high, the availability of the stocks to borrow to stay low, the short interest to be a very, very high percentage of the float, and then some price strength from IPOE. Because if it just continues to fall, like was happening here, then they're not going to have any reason to close their position, even if that fee to borrow is very, very high. What you need to have happen is even something just like this to start to occur. That gives you like a couple of days of green. And I know this is the hour, but here on the daily, we'd want to see something like, oh God, it's so hard to find a couple of days of green, but we want to see something like this start to form with IPOE, where the short sellers start to have to hold on to those very, very high fee shares that they've borrowed before buying them back. And then if the price is just creeping up day over day, that might cause a chunk of them to squeeze because they just feel that they have to close out their position because it's going against them and the fee is so high. All right, I know I just repeated myself a bunch about the fee and closing out, but I wanted to try to make it clear. Okay, well, I hope that everyone is sort of hanging in there with the tumultuous situation in the market right now, and I definitely wish you all the best, and I will see you in the next video.